Welcome to the Carpenter Law Firm. Today's church law seminar is about trends in IRS regulation of churches and other tax exempt entities. We're going to dive right in to the current IRS regulation landscape. This seminar is provided on October 17th, 2024. The information presented is intended to be accurate as of today, October 17th, 2024. If you're watching this on October 17th, 2030, no representations as to its accuracy. All right, the first question we have to ask is, will the tax exemption end? There's been some discussion about this, and we'll confront it head on right here at the beginning. Well, the tax exemption exempts income in two ways. Let's sort of give ourselves the broad overview. What is the tax exemption provided at the federal level? First, the exempt corporate entity pays no tax on income at the corporate level. So when the money comes in to the exempt organization, there is no taxation at the corporate level, unlike money that flows into big companies on the S&P 500, for example, or companies like Microsoft or Tesla. They pay corporate income tax. An tax exempt organization pays no income tax at the corporate level. We know this. So let's make up a church. Instead of calling it First Presbyterian or First Methodist, we'll just call it First Church, not First Baptist. We'll just create a hypothetical tax exempt organization and we'll call it First Church. So First Church doesn't pay corporate income tax on the income received. There's no corporate tax rate for exempt organizations, for exempt corporations. This is obvious, it's intuitive. When a church does its annual tax return, there is no tax paid on the income. That's the whole point, half of the point of being a tax exempt organization. So I said there were two manners in which the tax exemption works. The first is there's no tax on income at the corporate level. The second, of course, is that donors pay no income tax on the amount donated to an exempt entity. We call this the charitable contribution deduction from taxable income. Now I'm going to give you an oversimplified example of how this is intended to work, and it's dramatically oversimplified. If a churchgoer makes $100,000 of taxable income, and I'm dramatically oversimplifying, not a tax lawyer, I'm not a CPA, oversimplifying. Churchgoer has $100,000 of taxable income and donates 10% of it to the church. And this is not accurate about tax law. Then that churchgoer would have $90,000 of taxable income, because the donation has reduced taxable income by the amount of the charitable contribution. That doesn't actually work that way because of the way deductions work. But basically, by making that charitable contribution, that taxpayer / churchgoer has reduced his or her taxable income by the amount of the charitable contribution. It is a deduction from taxable income. Now, as it turns out, the tax code has changed over the years, and the importance of the mortgage interest deduction. You get to deduct the amount you pay for your mortgage interest from your taxable income, and your charitable contributions from your taxable income have become less important because Congress and the president have increased something called the standard deduction. intended to reduce taxes on people who don't make a whole lot of money, which is a different debate about public policy. So the tax exemption for tax exempt entities means these two things. It's the only thing that it really means at all. Doesn't mean anything else. The corporation pays no tax on income at the corporate level. There's no corporate tax rate for exempt corporations. And donors pay no income tax on the amount donated to the exempt entity. That's it. Doesn't mean anything else. Now, we can say this. Both of these components of the tax exemption are irritating to some people. Now, is it irritating when it's applied to secular nonprofits that do good things? Not necessarily. When it's applied to charities that do good things for consensus social problems, doesn't tend to be, at least in my experience. This is irritating to people who are irritated that large mega churches do not pay corporate income taxes. You could say this is irritating to secularists who do not like or appreciate that churches accumulate money and don't pay tax on it. And it is similarly irritating to the same folks that quote unquote rich people use their donations to these same mega churches, whatever that means, to lower their taxes. Because rich people should pay their fair share. And when they reduce their taxes by giving money to the mega churches, again, whatever that means, then this is all just using the tax code to make mega churches and mega church pastors wealthy. I'm not saying that. That's what people have been heard to say. Now, we also know that it would require an act of Congress and signature by the president to change the current state of the law on everything on this PowerPoint page, both as to the tax exemption at the corporate tax level and the charitable contribution deduction from taxable income. All of this is embedded in the statutory framework of tax law. And tax law is in the federal code, meaning it would take an act of Congress. The bureaucrats at the Internal Revenue Service cannot change either of these components. The exempt corporation paying no tax at income at the corporate level and the charitable contribution from taxable income, that's embedded in federal statute that can only be changed by an act of Congress and signature by the president. And if this sounds derogatory, I sort of mean it, I suppose, but the bureaucrats, the unelected employees of the federal government at the Internal Revenue Service cannot change any of the facts on this PowerPoint slide. All right, so let's talk about unrelated business income. The exemption does not apply to income from a bookstore, coffee shop, or real estate development. An exempt organization must pay tax on the profits or gain from the business income that is unrelated to the underlying charitable purpose. We call this UBI, unrelated business income. So a tax exempt college, for example, that operates a bookstore, where the endeavor of the bookstore should be that income exceed expenses. That's a profit. You can't run a college bookstore without the goal being that income exceed expenses. The end of the year, by the time you've paid the student employees, acquired the goods to be sold, the books and the trinkets that say college and whatever else is going to be sold, the computers, the laptops, the backpacks, whatever. The end of the year, whoever's running that bookstore must have the goal, or would fail, that income exceed expenses. Let's say the expenses are $1 million. Let's just make it up. The goal should be, and if it were me, my goal would be that it would have income of at least $1.2 million. Let's have a 20% margin on this bookstore for the sake of this discussion at a minimum. So we need to have a profit on the books, the backpacks, the laptops, everything else. We've got to have at least 1.2 million in revenue on $1 million of cost of goods. So at the end of the year, when we have a bookstore or coffee shop or whatever else is happening at this college or church, doesn't matter what it is, let's call it a church now or a coffee shop. We know we're going to have, or anticipate that we're going to have $1 million of costs, employees, coffee, janitorial, whatever it is. We need to project 1.2 million in income. When we have 1.2 million in income, we have $200,000 of profit. The church has to pay tax on $200,000 of unrelated business income. There's no question about that. That's been the law for many, many years. That has to happen. That is unrelated business income. And that has to be shown on the 990 tax return. That is absolutely taxable and does not remain exempt under the 501c3 tax exemption. And the church needs to have competent CPAs that understand how to deliver an accurate, unrelated business income tax return. So we absolutely have to engage professionals that understand UBI and the need for an accurate UBI tax return. Not particularly complicated. It's really not that different than any other coffee shop business or bookstore business. But sometimes the church will end up in a situation where it acquires real property, perhaps for a future campus, holds on to it for a number of years, and then because of the appreciation in the value of the real property, gets an offer to sell it. Somebody wants to buy it. And the buyer offers a multiple of what the church bought it for. Well, there's gain in there, and that is going to be a taxable event. That's obviously unrelated business income. The church is in the business of ministry, and owning and flipping real estate is unrelated to the underlying charitable purpose. The gain on that real estate is unrelated business income and is going to be a taxable event. And again, competent accountants that understand that that's a taxable event, even attorneys, that's a taxable event, need to be consulted when that occurs. All right, so trends in regulations. So one of the things that we know, and I've talked about before in these webinars for churches and clients of the Carpenter Law Firm, is that the 501c3 exemption. Now, why do we say 501c3? The Internal Revenue Code, the law, federal statutes have numbers, Internal Revenue Code, and they're numbered. Section 501, subsection C, number 3, articulates the exemption for charitable organizations that are tax exempt. So the exemptions that I talked about at the beginning is in section 501c3 of the Internal Revenue Code. And as it turns out, the exemption for churches is automatic. A church does not have to apply to the Internal Revenue Service, the IRS, in order to have the exemption. There is a form where a church can apply for an exemption letter. But Congress, years ago, recognized, many citizens elected to Congress recognized, hey, we have a lot of churches in America, thousands and thousands of them. Why would we burden these churches with the requirement that they apply for an exemption? It should be automatic. So the decision was made that all churches in America are exempt automatically. They don't pay tax, and donors to churches have their charitable contributions exempt from tax automatically. But other 501c3 charities do have to apply for an exemption letter in order for those organizations to be exempt under 501c3 and for the donors' contributions to be tax exempt. But churches do not have to apply for an exemption letter for the church to be tax exempt. So why do we do it? Why do so many churches apply for the exemption letter? And so why do so many churches have exemption letters? Well, it's actually pretty simple. It provides assurance that the organization is exempt. And here's a hypothetical. A donor comes along and says, I'd like to make a significant donation. I own significant property. I'm not saying that, a donor says that. And I want assurance that the church is exempt. And in order for me to feel really good about this donation, I'd like to see an exemption letter. I understand that the church's attorney is saying that the church is automatically exempt, but for my comfort, I'd like to see an exemption letter. Or someone else comes along and says, I just won the Mega Millions. I'd like to make a big donation. But for a donation this size, I'd like to see an exemption letter. Now, these are somewhat silly examples, but they're hypothetical, of course. But that's why some churches go ahead and apply for an exemption letter. And the IRS generally doesn't hassle churches much on their applications because the IRS knows that churches are automatically exempt anyway. Why would the bureaucrats go to the trouble of hassling a church on a straightforward exemption application when the church is exempt automatically? I mean, if you really think about it that way, what's the IRS going to say? No, you're not eligible, when they're obviously a church. When we do these exemption applications, there is a form. Now, if you have any experience with the IRS, maybe you're doing your own taxes or some other way, the IRS numbers every form. Your personal tax return is the form 1040. And you may know that there's a lot of exhibits. Well, the form here is called the Form 1023. It's a 28-page form, and early in my practice, I did a lot of these for churches and ministries, and for my father-in-law, who, if I've mentioned, was pastored various churches for 55 years. And I filled out these 28-page forms and put them in large 9x12 manila envelopes and sent them off to Washington, D.C. with many, many enclosures and exhibits, appendices, etc. And it's a somewhat laborious form. Recently, though, the IRS came out with the 1023 EZ for organizations with less than $50,000 in anticipated gross receipts in any of the next 3 years. And then within the last couple of years, I say couple of years, it's hard to remember, perhaps 3 to 5 years, excuse me. Both of these forms can only be submitted online at pay.gov. And it's roughly, I think, about a $600 filing fee. At the same time, every organization has to be current with the Arizona Corporation Commission. It does make it difficult to apply without being a current Arizona nonprofit corporation. Although in theory, a church could perhaps be an unincorporated entity, but it is difficult. Now, embedded in all of this, although it's not technically a change in regulation, upon dissolution of a church, all of the assets have to be transferred to another tax-exempt organization. And this may seem surprising, it may not be surprising, but if a church dissolves and the congregation scatters, I don't mean it to sound like that. I mean, the congregation of the church is one body, but the group that meets in that building decides to no longer meet there, and that building has to be conveyed, sold, transferred ownership to another tax-exempt organization upon dissolving the nonprofit corporate entity. That's a requirement. And there can be no private inurement, which means that the nonprofit entity, the tax-exempt organization, cannot make any one individual rich. You could call this the Jim and Tammy Faye rule. Nobody does that, but I do it, meaning you cannot have a tax-exempt entity where the senior person is getting rich. You cannot have a church where the goal is for the people at the top to be enriched personally. So those requirements have to be in the governing documents, the bylaws, the Constitution, the church framework, the Articles of Incorporation, and the IRS does check for that because we have to upload those documents. So in order to get the tax exempt letter, that has to happen. So from a change of regulation standpoint, you cannot even obtain the Form 1023 or the 1023 EZ in a fillable format. You can't use a pen on these forms anymore. It has to be done online. It's fields, you can tab through them, and then it's an upload situation with a credit card for the filing fee. Another change in the regulations is that as of this year, all tax returns are publicly available online. Now, it's always been true that the determination letters, a determination letter is we're the IRS and we determine that you are a tax exempt organization. That's the exempt letter. The IRS calls it exemption letter. I call it the exemption letter. They call it a determination letter. All of those are publicly available, and the tax returns are also publicly available online. And there's a new search tool where you can search all tax exempt organizations anywhere in the country. You know the name of it, you can search it, you could find all the tax exempt entities. And then if you find one, First Church, Murfreesboro, Tennessee, let's say, I made that up, and you can click on it and you can see the tax returns, the determination letter, and all the other data. So here's an example of the data points that can be obtained for every tax exempt organization in America. The public 78 data, copies of tax returns, Form 990N, determination letters. Now, they've always been public, but now they're online. So here's an example. This is the Goodwill of Central and Northern Arizona Foundation, the employer ID number, the name and address of the principal officer. I don't know this person. I just pulled this up real quickly. I thought, well, there's a Goodwill, all over the valley here. I thought this is a neutral organization. I'm not singling them out for any reason at all. Contributions and grants, line 8, current year, $2,084,745. They're up from the prior year of 1.937 million. I'm not saying that's high or low, simply pointing out that in 2022, this is the Form 990 return of organization exempt from income tax, publicly available. And this would be true for, and see here that on line 2, tax exempt status 501c3, and every organization that files a 990 is going to be publicly available. And you might say, well, that's sort of interesting, nothing to hide, no big deal. But in some churches, you might say, well, that can be tricky. You got people who glad they don't know about this, or maybe they'll find it one day, and nothing, can't change anything about it. You have to file, and it's publicly available. And you can see here in the upper right-hand corner, open to public inspection. When you file these returns under the year, as the filer, as the taxpayer, when you sign these returns, it's in bold, open to public inspection. Now, did you know it was going to go on the web? Maybe, maybe not, but it's right out there. And so it's a lot of sunshine on these things. And there's a summary too here, right at the top, line G, gross receipts, 2,259,794. I admit my ability to take a screenshot and crop it was not the greatest. Too bad my daughters are all grown with kids and spouses. If they were teenagers still, I think I could have probably gotten some better help, but didn't happen today. I was on my own. All right, so let's talk a little bit about auditing. Interestingly, the IRS is very upfront about their auditing standards when it comes to tax exempt organizations. And you might say, well, geez, I've been in ministry for all these years and we've never been audited. Well, it's good if you feel like they would have found something. It's good if you don't want the stress of having somebody in your conference room going through your stuff. But the old days when an IRS auditor would come to your office and want to go through your paper accounting files in the conference room for days on end, it's really not that way anymore. It's send me the IRS says, send me this and then send me that. It's more of a distance paper audit as much as anything else. And by the way, I've never been audited either way. So at least we have that in common. So here's what's happening. When it comes to auditing of churches, the IRS is quite upfront. Their policy is that they're either going to audit on the basis of the underlying exemption or on a failure to pay UBI tax. They're basically looking at one or the other. The one thing I did not mention about the underlying exemption is that once you have the exemption, which of course applies to all of the churches, including the ones that obtained it automatically, not just the ones that applied for and obtained a determination letter. Every church has one of the same requirement I'm about to say, which is exempt entities, churches are prohibited from being involved in politics. In other words, a church cannot be political, which is particularly true in this political season we're in, with the election coming up in roughly 3 weeks. That's a violation of the tax exemption. A church cannot have the pastor from the pulpit say, you should vote for fill in the blank, so and so for president. That's a violation of the exemption. And so the IRS is very concerned about a pastor taking the pulpit and saying, if you don't vote for this person for president, then that violates a biblical mandate. That violates the principles of this church. Or if you don't vote for this person for president, then I will be disappointed in you. Those kinds of statements are prohibited by the tax exempt status, and that will trigger an audit, could trigger an audit, and result in the church's tax exempt status being revoked. Now, some churches have said, and I've seen this happen, not necessarily among my clients, but here in Arizona, but some churches have said, we don't care about the stinking tax exemption. We'll pay tax on the income. Our donors don't care. We're going to preach whatever we want to. And if I take the pulpit and I say, we believe that our members, our attenders should vote for fill in the blank, then that's what we'll preach. And then mixing in a little bit of First Amendment, a little bit of freedom of religion, and we don't care about the tax exemption. That's happened. Now, they anticipate the audit and they anticipate the revocation of the exemption. But as long as their eyes are wide open that you want to say those things and take that position, that's what will happen. So they will audit on the basis of the underlying exemption, which will be forfeited if the church becomes politically active, or they will audit on the UBI, unrelated business income. So here's how it works. And this is the IRS's official position. It's right out front on the website, irs.gov. The auditing official, and it's not actually the auditor itself, him or herself, but a senior level IRS official must have a reasonable belief based on a written statement of the facts and circumstances that the exempt organization is violating the exemption or has untaxed UBI. Now, how do they do this? That person, that senior IRS official, by their own auditing standards, must form that reasonable belief based on newspaper or magazine articles or ads, such as First Church takes out a full-page ad that says, in this presidential election, First Church endorses so-and-so for president. That'd be an example. Television and radio reports, same thing. Pastor Billy Bob from First Church endorses so-and-so for president. That'd be an example. Internet web pages. A voter guide created and or distributed by the church, which happens now and then. It's one of the reasons why voter guides tend to be created by nonpartisan other groups that can be sometimes handed out at a church or in a parking lot or something like that. In my view, this tends to be kind of a gray area. And I think churches are taking a risk by allowing outside groups to provide voter guides at church or in a church parking lot. I think if that were under real scrutiny, an IRS auditor or someone really looking at it closely would say, playing with fire there. Documents on file with the IRS, such as these Form 990s, which the 990T does report UBI. I mean, essentially, you could self-report. You could accidentally show that you have untaxed UBI. And then this is the one where this IRS official who's initiating the audit could form a reasonable belief based on reliable information from concerned members of the church or the general public. Tattlers. Someone in the church could say, hey, we have UBI and we're not paying tax on it. Or someone in the church could say, I sat in that church for 3 weeks straight and they've got a program to politic for this presidential election. It's subtle, but here's how it works. They have team members that are engaging in this program to urge people to vote in the presidential election for this candidate. And here's how it works. They have captains and they have people who work based on this map of the city, and the senior pastor created this whole system. And he uses code words in his sermons. Not making that up. I just, no idea that even could happen or exist, but it's possible that someone in the church could go to the IRS and say, I oppose that candidate and I'm voting for the other person, but I'm troubled by it. And then records concerning the church in the possession of third parties or informants. So this is how an audit could happen where the senior IRS officer gets all this information from the public domain or from insiders within the church. And before you know it, the audit has been initiated with on the ground auditors who come knocking and saying, we have reason to audit your exemption, it's being revoked. Or We need to see your accounting system. We understand you have unrelated business income. Tell us about your coffee shop. What accounting system are you using? What's the cost of goods sold? Things like that. And before you know it, you're having to restate your financials or pay tax on your UBI, or have to really dig into that real estate transaction that happened on that undeveloped parcel that you bought, thought you were going to put another campus on, and before you know it, we've got some problems because the taxes were not done properly. So the upshot of this auditing piece of the presentation is no discussion of politics, because that's the fast way to lose your exemption. And don't mess up on the UBI by failing to consult with competent accountants who understand how to give good advice on tax exempt organization accounting and to do tax returns for tax exempt organizations and churches. All right, any questions? We do questions in the chat when I do webinars or Q&A. But that's the trend in IRS regulations for churches here in 2024. If there are no questions, that means I kept it tight. Well, I appreciate everyone for joining me today. This webinar will be on my website. If you think anyone else might benefit from watching it, thanks for joining me today and have a great afternoon, great rest of the week. Thanks.